Good morning, everybody. Good morning, everybody. Welcome back to Crypto Warehouse. My name is Mike. It is the 16th of January, 2026, and we have another busy show for you today. We, again, are going to mix it up. We're not going to simply sit here and talk about Bitcoin. We have got a lot to talk about, including Mr. Beast. We're going to talk about Mr. Beast. We're going to talk about Arthur Hayes, you know, the guy who sold the Ethereum, bought it higher, and then the price came down. We're going to be talking about real-world assets. We're going to be talking about the records set on Solana. We're going to be talking about the BNB burn, why that matters. We're going to be talking about Sachs Appeal. Not my Sachs Appeal, somebody else's Sachs Appeal. We're going to be talking about cookie crumbling, and then we're going to be talking about Eric Rugg. That's not the name of a gentleman. That's somebody who has pulled the rug. There is a lot of different people in chat because we are now streaming in different places. We've added a new streaming platform today. We're going to try streaming from here for a while. We did it a long time ago, back when we first started. We're going to stream from there as well. So we've got 3 streaming platforms. Give us a follow on all 3. If you're on Binance Square, good morning to you. We've dropped a red box for you guys over there as well. If you're on somewhere else, make sure you smash the subscribe button and the follow button. Manjeet, there is no way to drop anything on there. We can't give you anything on that channel. If you want a prize or you want any kind of reward, you have to go to Binance Square. There is no option over there to give you anything. So if you do want anything, go and get the red box from Binance Square. That's what I would say to you. Good morning, KB. The chat is a little bit different this morning because I've now got a multiple feed of different places feeding in. So I hope you are all doing incredibly well wherever you are. Now we're going to go and look at the crypto prices before we do anything else, because that is just how we work. Now, let me load this up and get this up and running, and we can get started. There we go. Now then, I've made a video today. Where next for Bitcoin? Episode 1, I think, came out on January the 6th or January the 4th. It's now January the 16th. We've done Where Bitcoin Goes Next, Episode 2. That video is uploaded and will go live after this live stream. I ran out of time today. I did 3 videos this morning. I've put 1 live on X. I've done the second one, which is the update on Bitcoin. And then the third video, I'm going to edit and put live this afternoon. That's about the Moon to Pack migration. So plenty of content for you guys. Now then, $95,500. Does it feel like the sky is falling? We have retraced 1.5% from the heady heights of 97,000 yesterday. I don't think it's all over yet. But anyway, Ethereum is still at $3,300. BNB still at 935. XRP still over $2. Solana still at 143. Cardano was lost 40 cents again. Again, not a lot has changed. A little bit of moving around, but not an awful lot. Dash is up 136.7% on the 7-day. I am not in the privacy party. I'm not one for this. I don't believe they've got a future, but there you go. I'm not going to sit here and crucify them every day. Pump is up 4%. ICP is up again. $4.40. It's up 40% in the last 7 days. I need to go and find out what my entry was on ICP. I need to go and find out what the entry was and see where the exit is going to be. For me personally. Now then, losers, Zcash is down, Aptos is down, Aerodrome is down at 55 cents. That's a really good price for Aerodrome. Asta is down. We've got some breaking news about Asta, which I think is going to bring them up just a tad. Litecoin is down, Polygon, VeChain, SBX, Algorand. I think we can pretty much say we're back to where we were a week ago. I'm not too overly concerned about various different prices. Now, we have a lot of different X files to get through today. I'm going to do them as fast as I can. and hopefully you will be with me. Now, just let me check my live. There we go, perfect. Now then, let's go back to where we were. Imagine swapping $220,000 of USDC to USDT and only getting $5,000 back. Got MEV'd. A crypto trader was sandwich attacked while making a stablecoin swap, losing $215,000 to a MEV bot. $220,000 became $5,000 of USDT in 8 seconds. Now, again, most of you watching are beginners. Most of you watching are brand new to crypto. If you want to swap $500, $1,000, $10,000, $100,000 worth of crypto, just go and do it on Binance. Don't mess around and try and do it through Uniswap or PancakeSwap. Just bring it to Binance. Put in $100,000. You're likely to get $99,950 back. Just do it on Binance. That's all I would say about that. Owning 0.28 Bitcoin puts you in the top 1% of Bitcoin holders. If you are watching on any one of these amazing channels that we're now streaming on, drop a comment in chat with a number 1 if you are in the top 1%. That's what I'm going to ask you to do today, because I am telling you right now, crypto as a viewership, as an audience, is absolutely finished. There is nobody watching me, Crypto Banter. There's nobody watching George. There's nobody watching any of the other people I've checked in on to see how they're doing. It is dire out there, okay? So I'm not expecting many people to comment, but there you go. Now, CryptoFace has said within 48 hours, Bitcoin will be at $100,000. ETH will be at $3,500. He said this yesterday at midday. So he is suggesting that by Saturday at midday, we will be at $100,000. And if we are at $100,000, you need to watch my video that I'm going to put out today telling you where we go from $100,000. KB, I always put things in for KB to smile at, okay? There's a few people in chat that I drop things into comments for. And when it comes to traders, I know it'll bring a smile to KB's face. Now, I happen to think this guy is great entertainment. But you have to understand, a lot of crypto streamers are entertaining. I used to watch BitBoy Crypto. The guy was entertaining, okay? Do I remember an awful lot about what he talked about? No. Did I ever buy anything he suggested on his channel? No. But I found him super entertaining. Now, the one thing I will say about BitBoy, while we're on the point, is he did forewarn everybody about the FTX collapse. I don't know if you were aware of this, but he did say, get out, FTX is something wrong, blah, blah, blah. And I did. I didn't have a lot of Bitcoin in there at the time, maybe 0.2, 0.3 Bitcoin. But he did save my bacon, so that I will always be eternally grateful to BitBoy. CryptoFace, I've never made a single trade based off CryptoFace or any other streamer for that matter, but I find him entertaining. I think he's a really nice guy to watch. I just think he's fun. But like I said, I like these predictions because they're not necessarily my predictions. They're other people's predictions. And I like just putting them up because there's no point in listening to me and just getting my opinion. That's why we do this channel. I'm showing you other people's opinions so then I can give you my opinion on their opinion. It's like opinionception, really. Now then, this is a little bit about what's going on in the world, which we're going to try and cover a couple of times a week, including in the stream, because we don't live in a bubble. There's no such thing as a crypto bubble. We have financial information. We have global information. We can't sit here and ignore what's gone on. We used to watch streamers during COVID and during other things that happened, and they have this bubble. And I know you come for crypto news, but these things affect your crypto news. Now, had Trump gone ahead with this with this strike, which was called off at the last minute, this would have affected the markets. But just because it's delayed doesn't mean it isn't going to happen, okay? I imagine that they've all got itchy fingers over there, and I think this could be the next one. Do I think it's going to absolutely rattle the markets? Not really. No, I don't. What is bigger news is Taiwan investing $500 billion in semiconductors in America. That's the big piece of news. Why is that a big piece of news? Because for the last 3 or 4 years, Taiwan and the Taiwan Semiconductor Company, they've been setting up a mirror image business in America because we all know what's going to happen to Taiwan. Taiwan is going to become China, and this isn't propaganda, this isn't conspiracy theory, it's just the next thing that's going to happen. So I think a lot of Taiwanese business is trying to relocate to America. You can go back to the Biden era to see the deals that have been struck. Keep an eye on that one as well. Now, London Stock Exchange, the LESG, I didn't even know it was called the LSEG, launched a blockchain-based digital settlement network for 24/7 instant settlement. The system builds on work on the Canton network. This is not the first time we've seen the Canton network mentioned in the last couple of weeks, have we? Was it JP Morgan? They're going to put their JP coin over there as well. Again, something to keep an eye on. I don't hold any Canton. I don't know enough about it. But when you start to see stock exchanges and JP Morgan use a chain, I suggest you go and look at it. It's probably been front run, in all honesty, by the pump that it had a couple of weeks ago. Now, this is one of two bits of breaking news. Aster has launched a human versus AI trading battle, funding 70 human traders with $10,000 each to compete against 30 AI traders. Now, who do you think is going to win? Genuine question. Who do you think is going to win? Do you think the humans are going to win? Do you think the bots are going to win? What do you think? Let me know in the comments. And like I said, I can see the viewing figures right now. Binance Square is always off the charts. Happy days. I think we've got less than 40 people watching over on YouTube, which is down. We were over 50. We're up towards getting towards 60 before Christmas. We're now down at 35. It's pretty appalling. And on the other channel, which we've just gone live on that I didn't tell anybody about, there's a test stream. I think there's 1 or 2 hardy souls watching over there. So thank you for watching us. Last little bit of news before we get into the show is this. I did a little bit of digging when I was making the video this morning about where Bitcoin goes next, and I said one of the catalysts is going to be Powell stepping down. There's 2 important dates on this screen. Everybody thought there was one important date. May the 15th. May the 15th is when the Powell's Fed chair term finishes. But, and I don't think he's going to see this day, by the way, there is a separate term as one of 7 members, which lasts until January the 31st, 2028. Now, can you imagine what Trump is going to do on May the 16th if Powell is still there? There's going to be a kerfuffle. Let's just leave it as a kerfuffle. I don't think either of these 2 dates really matter as far as Powell is concerned. I don't think he wants to stay on any longer. I think the political pressure, it builds and builds and builds, and everybody, there's not one person that's ever stood up against the President of America and survived. So we know Powell's gone. He's on borrowed time. There's a lot of people saying he'll be gone by the end of January, which gives us 2 weeks. We'll see. He's officially going on May the 15th. So that's the date for your calendar. Now, I think that we're going to get one of the Kevins. And when that happens, don't expect the markets to absolutely explode to the upside. Okay? It's great news, and it will be great news, but I don't think it's going to be what we think it's going to be. Now then, we don't really have any Bitcoin news today, believe it or not. What we have is this. Tom Lee's BitMine invests $200 million in Beast Industries. Now, you might recognize, or you might think you know who Beast Industries is. It's that man there. It's Mr. Beast, the man himself. Now, there's a lot of controversy about this man, which we're not going to get into. But this is, I think, where Mr. Beast is heading. It's called Beast Industries, but I think there's actually a sub-department called Beast Finance, I believe. BitMine Immersion Technologies, the largest publicly traded ETH holding company, announced a $200 million equity investment into Beast Industries this morning. In a press release about the investment, Tom Lee lauded Mr. Beast and Beast Industries as the leading content creator of our generation, with a reach and engagement unmatched with Gen Z, Gen Alpha, and Millennials. BitMine, which holds 4 million ETH, worth 13 billion, is primarily an ETH treasury company, as we know. Beast Industries' investment announcement came hours after BitMine's annual meeting. The deal with Beast Industries is expected to close on or about January the 19th, so that's only in 3 or 4 days. Time sounds like it's Monday or Tuesday next week. Actually, no, it's Monday next week. And there we go. There he is, BitMine and Mr. Beast. Now, why would Ethereum treasury company BitMine invest $200 million into Mr. Beast? He doesn't have any of the details on here. But basically, they have got hundreds of millions of followers. Okay? Hundreds of millions of followers. I think they've got 250 million followers, and they get somewhere in the region of 300 million video views a month. So Mr. Beast is the top dog. And if, for example, you are going to get people to invest in crypto, and I've said this many times myself, Bitcoin and at a push Ethereum, yes. It's probably not a bad idea if Beast Finance is going to go down the route of setting up like crypto investment plans, that you partner with somebody like Tom Lee or Michael Saylor or something like that. And I actually don't mind this at all. I think this is a really good take. Now, if people go and invest in this product, which doesn't exist at the minute, but if they do, I don't think they're going to do too badly out of it in the long term. I think Ethereum will be around for a while. I think Bitcoin is seriously going to be around for a while. So maybe Saylor, maybe Strategy, maybe somebody else from the Bitcoin angle gets involved, and why wouldn't they? It's Mr. Beast. But this is Mr. Beast moving into crypto. We've covered him before. We made a video about Mr. Beast and some of his failed projects. He did a project. He did an influencer token some years ago. So it's not his first foray, but I think this is actually a really good idea. And normally, I don't like these kind of things because I think they're like a value grab, a cash grab. But this, I don't mind so much. I think this probably has got some legs. Now then, let's move on very quickly before we run out of time. Arthur Hayes says the dollar liquidity held Bitcoin back in 2025. Sees better setup in 2026. Now, Arthur Hayes, the last time we covered Arthur Hayes in any great depth was when he sold his Ethereum. He then saw Ethereum keep running up. He then bought back into Ethereum at a higher price and then pretty much marked the top of Ethereum with his trades. That's the last time we really covered him. Now, Arthur Hayes is a very clever man. He's done very, very well in business. Nobody is infallible. And he's kind of tried to look at what happened in 2025 in this interview. Now, the issue I've got, not with Arthur Hayes, with everybody is, they all knew this setup in 2025. Michael Saylor, Tom Lee, Cathie Wood, they all knew the macro setup in 2025. And anybody can look back and say, oh, well, you know, it was the liquidity, or it was this, or it was that. But that's great, except the fact that you're telling people we're going to $200,000 or $300,000. And you're telling them that during 2025. So people are buying Bitcoin at $100,000, $110,000, $120,000, $125,000. And that's my problem. Unrealistic targets and unrealistic expectations. It's not just a crypto thing. It happens in everyday life, you know. Follow this Tai Chi thing for 30 days and you'll look like a 25-year-old. Or invest $1 a day in this rentals scheme and you'll turn that into 1,000x in 6 months' time. You know, buy Christmas trees in Canada. You know what it's all about. It's just feeding into those human emotions of greed. And my problem is that the majority of people out there, to sell clicks, will always go to the extreme. And that's never where anything goes. Bitcoin, I don't think Bitcoin has ever gone higher than anyone's ever predicted. and it's never gone as low as where people have predicted. So that should tell you something. Bitcoin's never gone to $250,000, and it's never come down to $10,000 from $70,000. So I think the issue is that I think social media is a lot to blame. It pulls everybody out. So Arthur Hayes was caught in this, and he was saying, we're going to go to X, we're going to go to Y, we're going to do this, and it never happened. And now he puts on his rose-tinted 2020 spectacles and starts talking about the fact that we didn't have the liquidity there to pump us any higher. But you knew this last year. And we were looking at all of your wonderful money charts that were going to tell us we were going to go to the moon. And then it diverged, like everything diverges, because Bitcoin isn't tied to a single thing. There is not one tracker that Bitcoin follows to the letter. Raoul Pal will still say it's the money supply. Arthur Hayes will say X, Y, or Z. But nothing will give you. There is no one thing that determines where Bitcoin goes. So towards the tail of last year, Bitcoin moved within a tight range between 87 and 95,000. We're sitting right at the top of that now. He stresses this behavior does not signal weakness in Bitcoin. It reflects how closely the asset responds to changes in liquidity. Generally, Bitcoin tends to stall when the dollar tightens, and when liquidity improves, price often follows. Now, again, there are risk-on assets. Bitcoin is one of those, and risk-off assets such as gold. Look at where we are right now. Gold is at all-time high. Silver at all-time high. The market is telling you that risk-off assets are where they see the value. And it's not necessarily the value in terms of they're going to keep going up, but wealth preservation. They're coming out of stocks, they're going into gold. But stock market's doing really well as well. You know, that put in a new all-time high recently. Bitcoin hasn't. But Bitcoin is on the riskier side, whereas gold is safe, Bitcoin is still seen as risky. So we're still erring on the side of caution. And again, the majority of the stock market in America is made up of the big seven, the Magnificent Seven. They're all tech stocks. But the tech stocks, if you take them away, America's not doing so great. So he looks forward and he thinks things will change in 26. Dollar credit could expand. One possibility, renewed growth in the Fed's balance sheet, which has already started. I think we've added, I've seen a few 8 billion and 14 billion injections into the markets. Bitcoin is now being used as more collateral. I don't want to go through all of this too much. But what I will say is that, yes, not having liquidity does dampen Bitcoin, but it's not the only reason that Bitcoin doesn't go up. There's many other reasons. Trump didn't help last year at all. Russia obviously hasn't helped at all. China haven't helped. There's loads of things that you can look at this. I'm sure there's somebody out there that's made a panel of all of these factors to give you like a feed and greed index style number that just reflects the market as a whole. I'm sure somebody out there has done that. I haven't done it. Right then, let's move on very quickly. Let me just keep an eye on the time. 11:23. Solana real-world asset market tops 1.15 billion, setting new record. Again, people will call Solana. People will say it's a scam chain. People will say it's a pump.fun chain. Solana doesn't care what you think of it. It keeps going. And yes, there's stuff there like that. But if you go to London, there are some very nice places in London that do some very nice things. There's also some not very nice places. So the bigger a place gets, the more you get of both sides. More goodness and more badness. Now, 1.15 billion in real world assets is a reasonable chunk of the overall market, which I believe is what, about 30, 40, maybe even 50 billion now. So it's still a decent chunk. It's got a long way to go. But look at the march. It's literally the march from March. In less than 2 years, we have gone from pretty much zero to over $1 billion, and we haven't even started yet. We have Remora Labs with their synthesized stocks. You can buy Tesla now over on Solana. You have Maple Finance, which we're going to do a stream about tomorrow. We're going to talk about what's happened in the last 4 weeks with Maple Finance. They are more of a different type of real world asset to Remora. So you have the foundations of real world assets, and that comes with liquidity, and it comes with users and things like that. People aren't going to build anywhere there aren't any users. You know, you've got Camino Finance, you've now got Jupiter moving into Camino's space. That's not a problem. I know there's some friction between those two teams, but it's healthy. It's healthy to have competition. It drives performance of the business, and it drives value to you, and that should be all that matters. Now, the report. The reported figure aggregates multiple categories of real-world assets: treasury debt, public equities, institutional alternative funds, and non-US government debt. Sorry, my phones keep stinging. Treasury-linked products and government debt have provided a foundational base. Tokenized equities, which is what Remora offer, and alternative funds appear to have contributed to the sharper step-ups visible later in the chart. I think Remora... I think they only launched in the last quarter of last year, and they were Step Finance. Step Finance we've covered many times before. They were like a Solana portfolio, and they had their own token. They had their own Solana staking validator going on, and we like them as a business. Got no commercial relationship with them whatsoever, but we are trying to get Remora Markets on to do an In the Trenches, which, if you don't know what an In the Trenches is, that's our interview show where the Oracle will interview people. I think we've done about 4 or 5 now. We're going to do Alex from Wolfies. We're going to do him probably next week. We're going to try and get Remora on the show. I'm going to try and get a few other people on the show as well. So we're going to try and get Remora on because we really like the real world asset narrative. Why? Because I don't feel it's as ruggy as many other markets. I don't really want to talk about meme coins. I don't really want to talk about things that are flash in the pans. I want to talk about things that will actually make you real money. You know, real investments, real projects, real companies backed with real assets. That's where I think the future of crypto is. And I've probably been saying this for ever since we've had the channel. So 1.15 billion on Solana is just the start. We're going to be talking about this in a few months' time at 5 billion, 10 billion, 100 billion. It's only ever going to grow. But remember, this is not new money to crypto necessarily. This is moving off-chain to on-chain. And people talk about, you know, crypto is going to grow by 10 trillion in the next few years. No, it isn't. Crypto is going to grow by a few trillion, but we're going to bring trillions of assets into crypto. If you have 10,000 physical books and you digitize them through whatever that Kindle, Amazon Kindle, you don't have 20,000 books, do you? They're still the same 10,000 books. You've got a kind of paper copy and a digital copy. Well, when you digitize Tesla stocks, for example, and there are 10 billion Tesla stocks, you don't suddenly turn that 10 billion into 20 billion by putting it on chain. So that's the other thing we need to move away from, this narrative that crypto is going to be a $20 trillion asset. It's not. It's going to be a $5 to $10 trillion asset with $10 trillion of real world assets on the blockchain. There's a big difference. Okay, creative accountancy is great for articles, but at the end of the day, it's the same thing. One Tesla stock on Remora is one Tesla stock in real life. They're not two different stocks. They're the same share of that business. Now then, moving on very quickly. 1.37 million BNB destroyed. Binance's CZ highlights massive 34th token burn. Now, just to put that into context, that's about $1 billion, isn't it? I think. If it's about $900 per BNB, it's probably more. It's probably worth $1.2 billion. I'm sure it's going to tell me down here in a minute, isn't it? The Binance community saw the execution of the 34th quarterly burn, which saw 1.37 million BNB moved out of circulation, stirring reactions across the community. There he is, Mr. CZ himself, Binance founder. The event saw 1 million tokens burned at once, has triggered a boastful reaction from the founder CZ, who has humorously asked about the USD worth of the massive burn to highlight the impressive weight of the move. His statement came in response to an official X post that confirmed that the BNB chain has completed its 34th burn. It's the first of 2026. It was 1.27 billion gone. Now, of course, bear in mind, I've talked about this before as well. BNB's burn mechanism is probably the best example of how a burn mechanism should work. There are others out there, of course, the smaller companies that have got burns going on. Syrup doesn't have a burn, but it has a buyback. Hype and Asta both have buybacks. One's got a burn mechanism, one's got a treasury. Dupe, same thing again. They've got a buyback, but it's not making much of a dent yet. But this is where it should head. This has been going on for a very long time. 4 times a year, they burn BNB. And over time, this number is going to shrink dramatically because the value of it is going to go so high. Are we ever going to see a $5,000 or a $10,000 BNB? I think so, just based on the burn mechanism. I think so. If you look at the total circulating supply of BNB, for example, if we go over here, BNB has 136 million. They've just burnt roughly 1% of the supply has gone. Now, if they're doing that every year, 4 times a year, that's 4 or 5% of the supply burnt every year. So within 10 years, you could argue, although it won't exactly be this, you could argue that they're going to burn 40-30% of the total supply of BNB if the price stays the same, which of course it won't. So long term, and when we talk about long term, your version of long term is medium term, which is about 5 years. Your BNB could very easily be worth $5,000 to $10,000 conservatively. And again, it's the creeping angel, weeping angel of all cryptocurrency, because it's just there. But the fundamental numbers behind BNB are there for all to see. So the burn every quarter of the year is an intentional activity automated by the team behind the blockchain to deflate the circulating supply to fuel scarcity. So the way to think about this is, another way to think about this is, you hold 1 BNB and it pays you no interest whatsoever. It pays you 0.25% interest. Your 1 BNB today, this time next year, your 1 BNB's value in terms of circulating supply will be about 1.05. So rather than paying you 5% APR, they're simply burning all of the BNB around you. That's another way to look at it. So you're actually getting 5% a year on your BNB through the fact that they're burning 5% a year. Interesting. And also, for me, the best example of how a burn mechanism can work. Because if you've got a token worth $10 billion and you're burning $100 million a year, it's not going to make a difference. It's not going to make a difference. Look at Crow. There's 100 billion Crow. They're burning, 100 million Crow a year. What's the point? It's worthless doing that. Right then. Goldman Sachs explores prediction market opportunity. Now, again, we've got to be quite careful when we talk about this kind of stuff because it's not the kind of stuff that we want to actively promote or talk about in any great depth. But this is the big thing at this moment in time. We've covered it quite a few times actually in the last, I'd say, 3 or 4 weeks, and it's becoming the next big thing. And the problem with it becoming the next big thing is it'll become saturated at some point, and then every man and their dog will have a predictions market. I know CZ's been talking about having them on the BNB chain. I think he said there's about 6 of them on the BNB chain. We know about Polymarket that's over on Polygon. We know there's other exchanges launching white label versions of these things. And at the end of the day, it's gambling. At the end of the day, it's gambling. And that's always been my stance on it. If you're a gaming company, call yourself a gaming company. If you're not a gaming company, and you do gaming company things and call yourselves a predictions market, you're a gaming company, you're a gambling company. And my issue is, it's disingenuous. If you say to somebody, Is Trump going to run again in 2028? Let's say that was a prediction market, and you place $100 on Trump running again in 2028, and then it transpires that he does run again and you win and you get your $200 or $300. How is that not a bet? Of course it's a bet. And the issue is the safeguards and rails around that I have a problem with. But anyway, I've covered that before. So Goldman Sachs is exploring prediction market opportunities. David Solomon revealed during a Thursday analyst call following the bank's fourth quarter earnings announcement on January the 16th. This move could bolster the legitimacy of prediction markets, potentially increasing transaction volumes and attracting more institutional interest in this rapidly expanding financial sector. And again, it's not a predictions market, it's gambling, okay? And if I was a gaming company, I would be screaming this from the rooftops. They have licensing, they have laws. It's examining the landscape to potentially expand its offerings. He said that they were very interesting during the call. Institutional interest in the prediction markets may enhance the sector's legitimacy. We've just said that. The move aligns with a growing trend of institutional interest in emerging financial instruments, though the official statements are sparse. Historical precedents from similar financial sectors indicate expanding markets often invite increased regulatory scrutiny. Predictions on the financial impact remain speculative, as no direct market effects or regulatory stance have been clearly outlined. Experts suggest the entry of a major player like Goldman Sachs could offer a more structured approach, attracting further investments, which leads me on to the title of this article, which is the best article of the day, and that is Sachs Appeal. You see, not sex appeal, Sachs Appeal. That was the best article of the day. Although it's no more riskier than leverage trading. I think the issue is, I mean, I dabbled. We were working with, what were they called? We were working with the one, does it begin with a D? Delphi. We were working with Delphi on their launch. And we had a play with some of the predictions markets. And some of them are straightforward. But the issue with them is, it's like, will the sun come up tomorrow and you can buy it at 99, and then the sun comes up tomorrow and you get 100 and you make 1.01%, whatever it might be. And bots out there are now dominating the predictions markets. There are bots that can arbitrage between different predictions markets, and that's the issue for me, is it's gone from fair to very unfair, and they're going to take the profitability out of the market. If bots can hedge against each other and use, one prediction market against another prediction market and create an arbitrage, you've basically taken all the joy and the fun out of it. Suggesting that Man United are going to beat Manchester City is a fairer bet. You're not betting against anybody else. The markets aren't overly saturated. But predictions markets, for me, I think they're great. But I see the longevity once they become regulated. And they need to get rid of bots. For me, they need to get rid of bots. And leverage trading is really gambling. Yes, I don't advise anybody to leverage trade at all. And the one thing I have said in the past before is, if you want to play with that, which is absolutely fine, it's your prerogative. There are tokens that you can buy, which are 3XL, 3XS, 5XL, 5XS, which are 3X and 5X the market in whichever direction you think you're going to go in. You don't get liquidated. The coin will simply lose value. So if you buy $1 worth of Bitcoin going to $98,000 at 5X and it goes up, you might make $1.25. That's the way I would look at it. You're not likely to lose. Leverage trading is not quite a scourge on the market, but I think it just ruins people. There are only look at crypto Twitter, for example. For every one crypto face who might be worth, I don't know, let's say he's worth $100 million. For every one crypto face, there is 10, 50, 100,000 leverage traders who have failed, because for him to win, people have to lose. And you can make a living out of it. Of course you can. You can grind and grind and grind, whatever. It's not those people that have learnt the trade that I've got a problem with. It's the people that come to crypto and go, I think Bitcoin's going to go up. I'm going to do a 25x long on Bitcoin. And then suddenly it drops 2% and you're wiped out. They're the people who come here and get the fingers burnt time and time and time and time again. And I'm in groups with some very, very clever people who get probably 3 times a month get taken out, get liquidated. And they do it every month. And I'm like, these are really highly skilled, highly intelligent people, and they just get kicked in the nuts every month. And you think you're going to learn your lesson this time. And then the following month, yeah, I've just longed Sol. Okay. And then Sol drops $5 and they've lost everything. And it's like, please. And then every once in a while they'll win. And they'll win like $1,000 or $2,000. And you look at them and you think, great, but net gain? Have you got a net gain for 2025, 2026? And again, you're right. It's as close to gambling as you can get in the crypto markets. Now, it's down to risk management. It absolutely is down to risk management. And the thing that people don't do, majority of the time that I see, is they don't put in stop losses. They don't use stop losses. You know, if you put a bet on Bitcoin going up to 98,000 and you place that at 95 and you put your stop loss at 96, you're in profit. It goes to 98, you've won, but it comes back down and you hit 96,000. You're still up a little bit, but people don't put in stop losses when they get wiped out. And even there has been plenty of examples in the last couple of months where people have put stop losses in and those stop losses haven't hit. In a flash crash, you're not guaranteed to have that stop loss. And that's another problem that the market has to try and sort out. Now then, this is a little bit more. The next two are a little bit less crypto-y and more not really so crypto-y, but I'm going to put them in anyway because it's a Friday. And I didn't really want to do a show today that was full of charts and full of, other types of things. X, yesterday afternoon, about 4 or 5 p.m., banned InfoFi apps, Kaito and Cookie. This is why it's called Cookie Crumbles. So basically, Kaito and Cookie Crumble, they were like, they monitored mindshare of projects by influencer. So if you were, let me think of somebody else that we've not mentioned in a while, that Martini guy. So if that Martini guy starts talking about Chippy Token, and Chippy Token are on Kaito, and he talks about it and he's getting hundreds of thousands of views, he will have maybe 15 or 25% of the mind share. And what projects have been doing is rewarding people in the top 10, 20, 30 mind shares of their project. We were lucky, actually. We did some videos about Mantra probably a year or two ago. We got up to probably the top 5, the top 10 on Mantra, and we were given 2 or 3 lots of rewards. We were rewarded for the video, rewarded for position, so it did work for us. But then over time, Kaito changed it, Cookie changed it, the bots started to come in, and it was just slop. AI slop. And you'd see the same people come on and say, I didn't know that this financial industry could be made so simple until I came across Cup. Cup is a revolutionary new way to do XYZ. And it's like, you sound like a 1960s TV commercial. What are you talking about? And clearly it was written by AI. So X has come along and banned them. They've blocked the APIs and they're trying to clean up the market. And Nikita Beer, he's been in a lot of bother recently, basically calling crypto Twitter crap. He said that the policy shift that left little room for ambiguity. Applications that reward users for posting content on the platform are no longer welcome. The decision takes aim at InfoFi, short for Information Finance, a model that ties financial incentives to engagement metrics. He said that crowding timelines with low-effort posts optimized for rewards rather than conversation. API access for those platforms was revoked immediately, with the expectation that automated accounts would disengage once payouts dried up. Again, this is great. Now, this this was going to happen, and people knew it was going to happen, because within about an hour of this happening, Kaito came out with this huge long statement about how they were switching to, I think it was called Kaito Control Center or something like that, Creator Center. But the tokens are finished, in my opinion. Tokens are finished. I wouldn't go near this token with a barge pole at all. I wouldn't buy this token. Maybe it has a comeback in the future, but why would you buy it? The same way, the same theory I've got for these tokens, I've got for privacy tokens. If you have nation states banning a cryptocurrency, don't buy those cryptocurrencies. Monero, don't buy it. It's banned in several European countries, and it's banned by the Dubai Financial Commission. They've banned it. Don't buy a token that's banned by nation states, because they all get together and they all talk about privacy and they all talk about these things, and eventually Monero will be banned in Europe, it'll be banned in America, it'll be banned in many other countries. Then you've got no off-ramp, and the token will lose its value over time. Kaito and Cookie have both absolutely abused X. They've ruined it for everybody. And this was a great move. An unexpected move, but a great move. Because, in all honesty, I can probably count on one hand. No, actually, I can't. I don't think I've ever posted an AI post. What I use AI for is, let's say I'm going to do the Maple Finance stream tomorrow. What I will do is I will go to AI and say, right, go and get me all of the articles and all of the posts from Maple Finance over the last 4 to 5 weeks, and give me a link to each of those articles with a title. I will then go and read those articles and those posts, and then I will put a stream together. So it saved me probably 2 hours a stream. Brilliant. I don't do that for when I do these streams, because I use a news aggregator to pull them out. But that's what I use AI for. I use AI to collate me all the information from the news channels, and it works a charm. But you can't read those AI posts and seriously tell me that that doesn't sound like a 1960s American housewife trying to sell you a refrigerator, because it absolutely does. And the problem is, the people that used those types of AI posts, they were so far ahead in the game that they kept the mind share. So Kaito then started to remove real influencers from the leaderboards and just brought in more bots, and they kind of ruined it for themselves. Incentivizing people to type slop is always going to end up with crap, and that's why one of the reasons I quite like Binance Square. The reason I like Binance Square is that they have an AI filter system on Binance Square which determines whether something is written by AI. Oh, did my camera flash off then and flash on? Am I all right? Oh, I've gone and I'm back. Look at that. Magic. So Binance Square rewards you for actually posting real content. X, which is sole purpose in life, should do the same. But at the minute it doesn't. Now then, very quickly, former NYC Mayor Eric Adams breaks silence on token controversy. Now, how many times have I gone over this same point? Never buy any token launched in association with anybody you know. Whether it be a sportsman, a musician, an influencer, a movie star, a wrestler, a politician, don't ever buy their tokens. Short them. Do anything you want. Going back to KB and leverage and risk management. If he launches a token and it goes to $50, short it. If David Beckham launches Bendit, short it. Okay? It's never going to win. You're always going to beat the house when it comes to people like this. Now, they think you were born yesterday. These people. Hoctor Girl also falls into this category. You can't claim ignorance as a defense. This is the next one, which luckily didn't get very far. And I know, Look at him. Seems like a nice guy. He's got a very nice suit. I really like his tie. He was the former New York City Mayor Eric Adams. He pushed back forcefully against allegations surrounding the NYC token, calling reports false and unsupported by evidence. I absolutely guarantee you right now, I can guarantee you right now, we would be able to go onto X and within 30 seconds find evidence because, what's he called? Zach XBC already found the evidence. Idiots. In a statement, he said, to be absolutely clear, Eric Adams did not move investor funds. Eric Adams did not profit from the launch of the NYC token. No funds were removed from the NYC token. The statement describes Adams' involvement as public, transparent, and mission-driven, focused on promoting blockchain education, combating anti-Semitism and anti-Americanism, and supporting non-profit and civic initiatives. Shapiro added that Adams' participation was never intended for personal or financial gain. As a reminder, the NYC token reportedly launched as a voluntary digital asset initiative, and Adams claims the team. Should we go very quickly while we're looking at this? Should we go and see what actually happened to this token? Because I think what you're going to find, that this token has probably lost 99% of its value. Come on. There we go. Now, which one is it likely? Must be this one. Is it this one, do we think? What's the odds that this is nearly down 90%? Oh, well, would you look at that? Would you look at that? It was as high. I can't even get that high. Where did it go up to? 35 cents. So it's lost 66% in 3 days. It's down 66% in 3 days. The token's price collapsed after on-chain data suggested that someone, don't know who that could be, pulled liquidity at the price peak. A brutal sell-off ensued, wiping hundreds of millions off its market cap in minutes and leaving many investors in the red. Accusations arose it was a garden variety rug pull scam. That said, Adams' team has argued in a statement that the token did experience sharp price volatility after its debut, a common pattern for many new launch tokens. Not like this, my friend. So he's made a statement here. Under no circumstances should you go near anything like this. We can have a look at any token you want. We can look at... Which tokens should we look at? That's a really good example. What about... Was it called Daddy? Was that the one? There we go. So there's this one, which, of course, is Andrew Tate's token. This is called Daddy. Let's wait for the screen to load. And then we can go to all. And you can see this token was at 23 cents. And then you can see it came down. And then Andrew Tate, Daddy, would have tweeted again. And it went back up to 16 cents. And now it's at 1 cent. So you are down 95%. Now, I don't know how to spell Hoctor. Maybe, I don't know whether it's that one or not, but let's not go for that one. What about, let me think of another coin then, just to give you an idea. Oh, what about, what was the name of not Jay-Z, the other guy? Yeezy. Was it Ed YZY? There we go. Here's another one. So this is your favorite rapper. I think he's a rapper anyway. He was married to one of the Kardashians. And again, oh, look at that. Does that look very similar? 34 cents. And I'm not counting the gain from 20 cents before you even say it. So then if we go back to NYC, maybe it's this coin. There's so many of them. Which one could it possibly be? That one. Now, I'm not saying it looks identical to those ones I've just shown you, but it looks absolutely identical. Don't buy any token launched by anyone you've ever heard of. Ever. Full stop. Absolutely going to go to zero. I am trying to rack my brain to think of anybody famous that's launched any token that's held its value. And I can't think of one because they all lose their value. So there we go. Now then, we have got to the end of the stream. We are... we are going to probably have a little chat for 5 minutes to at the end of the stream, simply because I wanted to finish a bit earlier today. If I need to move me that way a little bit, there we go. Now we can see the stream. Right. I want to have a quick chat about next week. Next week, I'm going to bring it up for you. And I'm going to tell you a little bit about what the plans are for the stream next week. So if we go down here, I have got a post. Okay, first of all, tomorrow I'm going to be streaming about Maple Finance. Maple Finance stream is tomorrow. I'm not sure of the time, maybe 10 or 11. Either same time tomorrow or 10 o'clock tomorrow morning. I'm going to be talking about Maple Finance. It's an update. We try and do 2 a month on Maple Finance. The last one I've done, I think, was about the 16th of December. We've had the Christmas break, clearly. I've also had eye operations, so I've been out of action. Okay, so Maple Finance next week. Sorry, on Saturday. But the one I want to draw your attention to, which, there we go. Okay, so on the 21st, which is next Wednesday, we are going to be doing our Wolfies Quiz Night. And that Wolfies Quiz Night will be on Binance Square, the other place we're not going to mention the name of, and I have a funny feeling the third platform that we've added today will be also streaming this. Now, the reason I'm telling you this is we are going to, the next evolution of the quiz, is that's why I'm getting onto this. The next evolution of this quiz is we're going to try and bring everybody's answers into the quiz. So, if you are on, we're going to have to mention names, aren't we? If you're on Binance Square and you type 1 to the answer, you will be included in the quiz leaderboard. If you're on Twitch and you type 1, you are included in the leaderboard. And if you're on YouTube and you type 1, you will also be included in the leaderboard. So we are working on a way of merging all of the platforms together to give us a unified leaderboard. Binance Square, YouTube, and Twitch. Everybody will be able to play. Everybody will be able to win. We just have to work on it a little bit more. Now, clearly, we've been running it for over a year now on YouTube, and it works fine. We do the Wheel of Fortune on Binance Square, and it's a little bit unfortunate that we do that over there because we'd love those guys to be involved. But this is going to be the next iteration. And again, I want to put this out there as well. As far as we're aware, we are the world's first interactive quiz. Not interactive quiz in crypto, the first interactive quiz with a live real-time leaderboard. A leaderboard where if KB types 1 and Kishan types 1 and Tariq type 1 and everybody types the same number, you all appear on the leaderboard with 1 point. If KB gets it right and everybody else gets it wrong, KB gets a point, nobody else does. As far as we're aware, we're the only people that do that in the world, okay? So we're now trying to make it better. We're now trying to bring Twitch in and Binance Square. And we're going to have a chat with... Hang on, I've just realised something. There we go. We're going to have a chat with a few of the guys at Binance Square. The Binance Square stream is only running, as far as we're aware, about 6 seconds behind. And I think that's enough to include them in the quiz, because I think we get 40 seconds to answer. So I think we can probably get away with it. I think we can do it. And the Oracle, this is what the Oracle is working on now. Hopefully we get this fine. But next Wednesday is the next quiz. It's Wolfies. And the theme of the show will be, can you have asset and revenue backed IP in 2026? Now, clearly, we've got Pudgy Penguins, and they've just signed a deal with Manchester City. They're going great guns. But can Wolfies replicate that? Can the Wolfies get to the point where they become an IP-based NFT project? And again, We don't know the answers to that. Time will tell, but we are going to go through it on Wednesday. So, making sure I actually get into the end of the show. A question over on Twitch. Love your stream. Hope you're well. Would you mind adding me? We'll have a little look at that. Yes, I'll certainly have a look at adding you over there. It's 11:59 and 55 seconds. As I've said, I've got a load of videos that I want to get out. As soon as this live stream ends, I'm going to put the video that I've done for the OGs live today. I've already got the video about the Man United Man City game. That's already gone out on X. And the other video I've got to edit now is about the moon to pack migration. So we're going to go and talk about that anyway. But it was nice to stream in a different channel for once. Thank you, Manjeet. Thank you, KB. It's really, really quiet. I appreciate you guys being here. I know it's really hard for you to show up every day when crypto is really not doing what we want it to do. So I greatly appreciate that. And I will see you tomorrow for the Maple Finance stream. Thank you all. Thank you, KB. Thank you, Manjeet. Thank you, Mighty Brownie. And I will see you all soon. Take care.